Hi there, welcome to Kneppy Invest, and welcome to an analysis of a company inspired by a podcast from Stock Club by My Wall Street, episode number 268, released on 3rd of July. This particular episode was titled Two Undervalued Stocks to Add to Your Portfolio. The two companies featured in this particular podcast were Novo Nordisk and also Nike. So I'm going to be featuring Novo Nordisk in this video, and then I'll do a separate video on Nike. I am a shareholder of Novo Nordisk, but not a shareholder of Nike, but I am interested in doing a little bit of research on Nike. So in fact, in my video on Nike, I'm going to do that completely blind. I have not done any research on the company just yet. Now, because I am a shareholder of Novo Nordisk, I do know this company a little bit more than Nike, although how much more can you know Nike? We know what Nike does. And most of us also know what Novo Nordisk does. So originally, Novo Nordisk was mostly focused on diabetes. And because of Ozempic, which they have developed, that was also, or that is also being used to treat weight loss. So those are the main focuses of Novo Nordisk: diabetes and also weight loss treatments. Okay. So what I'm going to do in this video is I'm just going to have a look at some financial metrics to determine whether Novo Nordisk is high quality or not. That is typically the first stage or the first step I do when I'm researching a company. I ask the question, is a company high quality or not? Because that determines how I'm going to treat a company. For instance, if I think a company is high quality, I'm way more likely to want to own that company for the longer term. And if I find a company is not high quality, I'm more likely to trade that company. And that's important because when it comes to high quality companies, I'm looking for different things compared to low quality companies. So for low quality companies, it's all about the chart. Really, that's all I care about, the chart. I might care a little bit about the valuation, but everything else I don't really care about. It's just about the chart. It's about technical analysis. But for high quality companies, it's all about growth. How likely are they to continue growing is important as well, that sort of thing. Some of the other things I look at are what might be described, well, what I would describe as quality metrics or efficiency metrics like return on equity, return on invested capital, and also look at valuation. Although in saying that, I do think, and this is a recent thing, I do think that valuation for a high quality company is a little bit overstated. I don't think valuation matters as much for high quality companies because technically a high quality company share price should be increasing through time. So if you discover a company is high quality and you want to own it, why not just buy it straight away? Don't worry about the share price falling, just buy it because more than likely the share price will increase from there. Not all the time, because if a company is significantly overvalued, even if it's high quality, you might have to wait a little bit more for the company to become fair value even. Anyway, so Novo Nordisk. Okay, first thing I'm going to do is have a look at growth, particularly revenue growth and then earnings per share growth. I do prefer revenue per share growth, but I don't want to be too picky here because unfortunately Fiscal AI doesn't really show you revenue per share growth. Guru Focus does, so I am leaning towards Fiscal AI just because of cost. Guru Focus was a little bit too expensive for what they did provide, but Guru Focus did focus on revenue per share growth, which I do appreciate. Anyway, so we have a look at Novo, and the reason I do prefer revenue per share growth is simply because that's per share. That's per share. So it eliminates any dilution through capital raisings. It also eliminates any sort of share buybacks. So we want to know per share information. So typically earnings per share is, what we look at when it comes to profit. And so I don't see why revenue per share shouldn't be any different, or revenue shouldn't be any different. Anyway, so if we have a look at revenue growth over the last 3, 5, and 10 years, fantastic. In fact, over the last 10 years, 12.5%, 5 years, 19.1%, and 3 years, 26.7%. So we have seen a bit of acceleration in revenue growth. However, there is concerns about increased competition in this space, obviously so, because this is going to be a significant growth area over the next 5, 10 years. So we have more competition, and more competition means tighter margins, that sort of thing. Now, possibly name or branding could be important. Everyone's heard of Ozempic, so that could be important for Novo Nordisk. I have a feeling that maybe, and we'll have a look at this in a second, that maybe revenue has dropped in the last year, maybe, because the share price has pulled back 50%. Yeah, that's right. Share price has pulled back 50%, which is one of the reasons why this company was featured in this particular podcast episode. Two undervalued stocks. Anyway, so nice revenue growth. Earnings per share growth, similarly really good over the last 10 years, 15.2%, 5 years, 22.4%, and 3 years, 29.7%. So this has all the makings of a high quality company. But for me, this is not a surprise. And it's one of the reasons I bought into Novo and Nordisk a few years ago. Now, after I look at revenue and earnings growth, I then focus on margins. Gross margins, 84.6%. It's pretty good, pretty good. Operating margins, 48.4%. And this is another reason why there might be increased competition, because competitors or possible competitors see these margins and go, oh, I want a slice of that pie. By the way, Novo Nordisk has a market cap of about $300 billion. A little bit of debt, but not too much. Debt to equity, 0.9. Some people will focus on debt to equity. I do mostly. And debt to equity of 0.9 is... You don't want to get too high, much more higher than that, but it's good. It's okay. We'll say okay. It's not great, but we'll just say okay. Okay, so margin's pretty good. And we'll have a look at the margin history in a second. We don't want to see margins dropping. That could be the first sign of increasing competition. And the cost of increasing competition, you have to decrease your margins to keep your products attractive to the consumer. Okay, next thing I look at is return on equity and return on invested capital, a 5-year average in fiscal AI. Return on equity is 81.3% and return on invested capital 29.3%. I tend to focus on return on invested capital for these type of companies with a bit of debt because debt is included in return on invested capital. So 29.3%, 5-year average, beautiful. That's exactly what you want to see. We'll have a look at the history of that as well later in the video. And that's it. I don't really care about dividends for high quality companies. It's not about dividend. It's about growth. Now, a little side benefit of these high quality companies could be a little bit of a dividend. And typically that dividend will grow over time, possibly even significantly. Dividend yield for this company is at 2.5%. And payout ratio 48.5%. I would prefer that to be a little bit lower, but I will take 48.5% dividend payout. I want to see these companies reinvesting the money they make back into the company for future growth. Okay, now into valuation. P ratio 18.9. Okay, so just because it's 18.9, that tells us absolutely nothing. I'll be honest with you, that tells us absolutely nothing. You might compare this P ratio to, say, Eli Lilly, one of the competitors, and I'm pretty sure Eli Lilly has a significantly higher P ratio right now. Let's have a look. By the way, I'm also a shareholder of Eli Lilly, and Eli Lilly's P ratio is 65. So if you just compare Novo Nordisk P ratio to its competitors, it looks really attractive, doesn't it? 18.9. But I also like to look at how the P ratio of this company has changed or not changed over time. Is this a typically normal level for the P ratio for this company over the last 5 to 10 years? Or is this higher than what you usually see? Or is it lower than what you usually see? 18.9 does seem to be fairly low for a company that is growing and might suggest or confirm that the market is a bit concerned about increasing competition. So P ratio 18.9, price to book 14.2, price to free cash flow 24.3, and EV to EBITDA 12.8. Forward-looking P ratio is at 16.4. So the market does expect a bit of growth. And yeah, that's probably what you could say. Bit of growth moving forward for Novo Nordisk. Okay, so next thing I'm going to do is have a look at just the growth in revenue. There it is. Look at that growth over the last few years. Brilliant growth. And that's because of Ozempic mostly. But even before that, revenue was growing. Now, albeit fairly slow back between 2016 and about 2018, but sometimes that happens. But since then, revenue has really taken off, increasing 11.8% over the past 10 years. That mostly has translated to income, I would assume. Let's have a look. Yet, in fact, income has increased at 12.6%, so maybe an increase in margins over the past 10 years. You could also have a look at a quarterly breakdown. So you can actually see that in the last quarter, revenue actually did drop from 85 million to 78 million. So maybe that's one of the reasons why the share price has dropped. We'll have a look at the chart in a second. But over the last 10 years, revenue and income mostly have gone up each and every quarter. Income can be a little bit more spotty, up and down a little bit more. And that's one of the reasons why I don't tend to focus as much on income or profits as some other people, because a lot of times it can be one-offs and it can distort how a company is performing. So this little drop in revenue in the past quarter could be a concern, but we'll wait and see to see how this company performs in the next quarter. Okay, next thing I'm going to do is have a look at margins, and this could be important. We don't want to see margins dropping. We'll go back to the yearly. Oh, I suppose we can start with the quarterly, yeah. Unfortunately, in Fiscal AI, they only allow you to look at the last 10 periods. So if you're looking at quarters, that's the last 2.5 years. If you're looking at half yearlies, that's the last 5 years. If you're looking at annual numbers, that's the last 10 years. In Guru Focus, you can look at the last 10 years of quarterly numbers. So that's one little thing I don't like about Fiscal AI, is when you look at quarterly, it's just the last 10 periods. Okay, so I'm just going to have a look at gross margins first. Now, this is the last 10 quarters, and we're not really seeing any significant changes. So you do see it fluctuate a little bit, but over time, it's been going sideways. A little bit of drop in gross margins in the last quarter, but we've seen that in the past. That's not necessarily a bad thing at this stage for Novo Nordisk. So now let's focus on operating margins. And in fact, operating margins have been increasing. Yes, operating margins have been increasing over the last 10 quarters from 44.6% to 49.7%, and that is the high, which was seen in the last quarter. Now, let's have a look at the annual numbers. So first of all, this is gross profit or gross margins. Now, between 2015 and 2021, gross margins were actually dropping. Now, albeit not by much. So it looks a little bit more dramatic on the screen here, but only dropped from 85% to 83.2%, and it's risen back up to 85%. So you could say gross profit margins have been steady over the last 10 years, which is a sign that this company hasn't really seen much competition during that time. If you see gross profit margins dropping a fair bit, that could be a sign of increasing pressures, either through competition, maybe even through inflation. And we haven't really seen that for this company. What about operating margins? Has that dropped? Let's have a look. In fact, operating margins have been rising over the last 10 years from 43% to 48.4%. How much further could it rise? Don't know, but this is a good thing as well. And more than likely, one of the reasons why operating margins have increased over the last, say, 3 years is because of Ozempic, and a lot of people just want Ozempic. So really, Novo Nordisk can literally sell it at whatever price they want. Okay, next thing I'm going to do is have a look at the companies. Yeah, we'll have a look at return equity and return invested capital. Yes. And what we want to see here is, or what we don't want to see, is either of these metrics dropping through time. Now, I'll just focus on return on invested capital. Yes. So this is return on invested capital for Ozempic over the last 10 years, and it has been dropping. And in fact, you could even say consistently dropping, although between 2021 and 2024, it was rising, and then a sudden drop in the last 12 months. I would say that's because of a quarter. Let's have a look at quarterly numbers. Yeah, so it does look, if you have a look at quarterly numbers, return on invested capital was rising, and all of a sudden it just dropped in the last quarter. So last quarter was a little bit disappointing, it seems like. Slight disappointing. Now, maybe Novo Nordisk can go back to the growth, increasing return on invested capital, and maybe the share price has reached a floor. But no significant red flags when it comes to return on invested capital over the last, say, few years and even 10 years. Okay, now on to the valuation of this company. So what I'm going to do is we'll have a look at the P/E ratio and the history just to see where it stands right now. And this is really interesting. Well, that's the last 10 quarters. So we want to go back to the annual information. There we go. Okay, so this is the last 10 years of Novo Nordisk's P/E ratio. It does seem the floor in the P ratio for this company is around 15, which we saw back in 2016, and then it rose. So between 2016 and 2024, this company saw a fairly long period of multiple expansion. The market was more and more willing to pay premium for this company. And you'll probably see the share price. And because the company was going through financial expansion and also multiple expansion, we probably saw a significant increase in share price during that period. So the P ratio went from 15 to a high of 50. So we probably saw a significant increase in share price. Now, since then, we have seen a significant drop in share price, and it hasn't really been the financials that has seen the share, or the reason why the share price has dropped, because we did see a little bit of a pullback in the numbers in the last quarter. But the whole reason why the share price has pulled back is not because of financial contraction. It's been because of multiple contraction. The market is less and less willing to pay a premium for this company. You could say the market wants a discount for this company, hence that particular podcast. So right now the P ratio is around 18. So it is towards the lower end of the P ratio range for this company. So yeah, maybe I do agree with this particular podcast. Novo Nordisk is looking attractive just based off P ratio. That's not the only thing I do look at. Also like to look at EV to EBIT, free cash flow yield. I sometimes like to look at EV to free cash flow. Sometimes some of these can be a little bit lumpy. Let's go through these fairly quickly. We'll start off with EV to free cash flow. Yeah, in fact, it is at historical lows right now. Well, not as low as we saw in 2017, but towards the lower end anyway. So EV to free cash flow looks interesting. What about EV to EBIT? Yep, very similar to the P ratio, towards the bottom of its historical range at 13.6. And what about the free cash flow yield? Got to hit the right button. So free cash flow yield is at 4%, which is actually quite nice, but not historically high. We do like to see high numbers when it comes to free cash flow yield. So 4.12% is much better than what this company saw back in middle of 2024 when it was 1.4%, but not quite as good as back in 2017 when the free cash flow yield was about 7%. That's pretty high. So just based off this metric, maybe not as much value. Okay, now onto the chart. And sometimes you can just tell whether a company is high quality or not just by looking at the chart. Novo Nordisk. Which one should we have a look at? Because I was just looking at New York Stock Exchange, we'll just stick to that. Yep. Although I have a feeling the question becomes, how long has this company been listed on the New York Stock Exchange? And what we'll do is we'll have a look at the weekly chart. Okay, it's been listed for a while. Yeah, a long time. Okay. Now, if we go back, say, between when they listed a long time ago. If we go back in time, this is the chart of a high quality company. This has all the characteristics of a high quality company. So with the 200-week moving average, all we're looking at is, has this company been a really good buy when the share price has dropped below that particular moving average? And the overwhelming answer here has been yes. So the first time here, I won't go back any further than 2000. The share price did fall below that moving average in 1999. That was a good buy, wasn't it? And then it fell below in 2002. That was a pretty good buy. Then it next fell below during the GFC. That was a pretty good buy. And then stayed above. Then the rapid drop in share price back in 2016. We saw that with some of those financial metrics or valuation metrics, whatever. So for some reason, the share price or the market just fell out of love with this company for some reason. And that looks like that was short-lived. And that was great buying for Novo Nordisk. Briefly back in 2018, during the COVID-19 financial panic, share price perfectly bounced off the 200-week moving average, and then we saw the share price just take off from there. And now share price is below the 200-week moving average. So a lot of things I'm seeing here suggest that maybe Novo Nordisk is or could be a pretty good buy. So I'd say this is a high quality company. I do see signs that this company could be cheap. Now, I'm recording this video on 16th of July 2025, so everything probably has changed from when I've recorded this video to when I release it. But just looking at this company, everything I've seen, this could be considered a high-quality company. Okay, but does it deserve a place in your portfolio? That's for you to decide. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.